Hey everyone, welcome to the daily analysis for GBP JPY, April 15th, 2009. The time is currently at 6:02 GMT. Looking at a daily chart for the pound yen, I already have the channel drawn up as well as the 145.78, 145.70 major support line, as well as this daily CCI trend line. It was broken yesterday with a bearish candle, and as you can see, the new daily candle, which is 6 hours old, has already moved down between 150 and 170 pips, bouncing off of the 145.78 support again. So this is something to keep continuously to keep our eye on. The daily trend is broken, so it is possible that we might be moving lower, but we're going to need a break of this trend line here first. Now that we've broken this trend line, though, we can start redrawing another trend line right here for a bullish break. This would take some time to get to, but might be something to look at in a day or so. So moving closer to the daily chart, we got the 145.78 level, and we're going to look at these two peaks around 149 and 149.25. And something just to keep an eye out for is just the choppy levels that are around 145.78. The first time we went up, we did hit 145.05. So if we do break this, look for a daily close below 145.78. Not necessarily just a break of it, because we might get stopped by this 145. Time will tell. So moving into the 4-hour chart, I am going to make this a minor trend line right here, or support and resistance. Looking a little bit closer though, there are a couple lines I want to draw. One is the 149.00 level, and one is the 149.25. This one is a major one. So a couple minor, a couple major. Looking at this chart, you can see that we're obviously in a range in some period of consolidation. And on the 4-hour chart, the CCI possible trend lines, you've got this one right here for a possible bullish break, and because of this little hump in the middle, you actually do have this trend line right here. The CCI itself is approaching the oversold or extreme levels, so it might potentially reverse. We are sitting right above the major support level at 145.78, so if there was any place where it would likely do it, now would kind of be the time for it. So pay attention to that over the next couple 4-hour candles. On the chart, obviously we're trading within the channel, and as each day goes by, the bottom of this channel gets closer and closer to price. We're still at around the 140 level. It's not increasing all that fast. On the chart, take the high from yesterday and the high from last Sunday or last Monday, and you get this kind of trend line right here. And taking into account the initial bullish trend back here from 135.70, you can see that this is potentially from here to here, here to here, and to where we are right now. This is potentially just a kind of pennant pattern, like a bullish pennant, but the confirmation would be on a break of this trend line right here. This is one of the reasons why I'm using this 149.00 level, just because a break of this would be a new high, as well as it would be a break outside of this trend line from 151. Obviously, the confirmation major trend line would be 149.25, which is 25 pips above it. So keep an eye out for that. So I'm bullish as long as we stay above 145.70 and keep a daily close above it, because this is potentially a very bullish pennant pattern. So we're going to zoom in a little bit down to the 1-hour chart. You can see obviously the last 17 hours have been rather bullish, or rather bearish, sorry. And the CCI itself has been kind of up and down, not really showing us a lot. What is important though is we did have this bounce off of here with a nice hammer candle, and it did close, 37 pips under, but we did get this bounce, so it might just need a little bit of time to get going to continue up to test the 148 area. Um, what I want to point out though is these two lows right here and right here, because these are two major lows that happened throughout the day on the 1 hour chart. And after we broke below them with this candle, we continued moving down. And I'm going to draw a quick trend line right here just to show you guys. Might be a little bit hard to see, but we're going to examine this trend line right here in a brief second. But note that these two lows right here that the market bounced off and then broke, and then we created this trend line right here. So we're going to zoom in a little bit, and you can see that even on the 30-minute chart, this trend line still exists. The two lows here at 146.90, 146.95, and even on a 15-minute chart, that same trend line is there. Each time it came up to this trend line, the market pushed it a little bit lower. It retraced a little bit in case you were wondering to go long, but it came up to the trend line and got pushed lower again, pushed lower and pushed lower right up until we bounced off of the 145.78 support level. We got down to 145.82. We had a nice reversal setup, and then we broke the trend line, and after we broke it, we went about 70 pips higher. But the level that we stopped at right here, these are those 2 hourly lows. This is a perfect example of old support becomes new resistance. So if you were doing a short-term trade off this, off the 145.78 level, and you wanted to wonder where a good area to take profit would have been, take a look at what happened throughout the day, and the 146.90 level would have been a good idea to expect a bounce off of, but you're going to have to set your take profit before it reaches that level, because very rarely does it go to the pip, and you want to make sure your trade gets taken out in profit. So 146.75, even as high as 146.80, would have been pushing it a little bit, but both of those would have been hit. So I just wanted to show you guys an example of that, of a kind of scalping trade that you could have done on your own. These kind of trades happen all the time, but you can see that this trade itself was a little over 4 hours in the making. These are 15-minute candles and 4 hours in the making, and the trade itself took about an hour, a little bit less. So these are just kind of things that you might want to look for throughout the day, of support and resistance that forms throughout the day, as well as candlesticks that might be important. So in order to continue the bullish trend, we're obviously going to need to move a little bit higher than 146.90. A break of here could lead to a retest of the trend line on the 4-hour chart around 148.40, 148.30, and a break below 145.78 could lead to an immediate retest of 145, as well as daily trend reversal down to the bottom of the channel around 140, 141. We are in a potentially very bullish setup with the consolidation the last week in a possible pennant pattern. So keep an eye out for which way the support and resistance breaks. Yesterday we did have the 149.25 level. The daily candle was very bullish, and we bounced off of it again. So a break above 149.25 would lead to a retest of the upper channel. Right now is actually around 154. So keep an eye out for a break of either side, and make sure your trades are logical, smart, and pay attention to the support and resistance as well as candlesticks that form throughout the day. Good luck and happy trading.